Good morning, traders. Today is the 13th of May, 2021. My name is Neville Hornsey, market analyst with Youtrading, and today I'm going to take a quick look at the euro dollar, but I'm also going to take a look at other elements of the markets that were affected by the CPI reading yesterday. So I'm going to start with the US dollar index. I've marked that it's in a downtrend. We've tested this particular swing lows here from the sort of 16th of March. We tested those with this price action in 22nd of April and again at the beginning of May. Support became resistance. Prices dropped down towards the $90 and the $90 level held. And then yesterday we had markets expectations of CPI were beat. So we had a big bullish move in the US dollar as the US yields rose as well. The price action suggests that we stalled at the 50% of this move down. That is a technical place that a lot of traders will be looking for a reversal. So $90.70 is kind of the first point where bears might step back in. We have this downsloping trend line. It's been touched a couple of times. So if we were to get a little bit higher to say 90.8, then that is confluent with this swing low here, this little balance area here, the 61.8% retracement and the trend line. So ideally we'd get to that trend line to the 61.8% retracement. Any balls that jumped in then would be trapped, and that's when we could get a move to the downside. Now, the CPI reading yesterday, as I said, did beat market expectations quite massively. That has caused the S&P and a lot of the indices to sell off. We had a big sell-off yesterday. It closed at its lows. It closed below the 50-period moving average, and it looks like it's heading back down to find support. That could be at these previous swing highs, which were resistance before the breakout. So below 4,000 is possible on the S&P. The VIX itself is rising, so the volatility is coming back into the markets. So there are trades to be made. But if we go back to the dollar, the euro dollar is the largest component of the dollar index. And I've got here a downsloping trend line through the sort of extremes of the swing highs. And you can see that, we tested it, came back in, found the 50-period moving average, and then we pushed higher, broke above. And now this could be the breakout, the retest, ready for the continuation higher. The market structure is bullish. We've got higher swing highs and then higher swing lows. We've got momentum shown here with the 50-day period moving average in red above the 200-period moving average. They're curling upwards, showing that the momentum is, on average, stronger. So I'm thinking momentum and price are going to lead this higher. And then we may be able to test this sort of swing high here. If we can get above, obviously recent days swing highs, there'll be stops there and acceleration up towards this one spot 2250 level, and then carry on to the years highs. Looking at the British pound versus US dollar, that might come back down, test this swing high here from the 20th of April. It was a resistance level that which then broke out on more hawkish sentiment from the Bank of England, good GDP data from the UK, and obviously the UK's vaccination program is doing well. So we could get a pullback today. Then the US dollar, if that was to drop further, as I expect, then that's when the British pound goes higher. Again, momentum's up and price action is showing bullish moves. So we're just waiting for possibly the US continuation jobless claims data today. And then we've got the FOMC meeting next week. So sometime in the near future, we will know for sure whether or not we've got momentum to the downside in the dollar, or whether they're actually going to take it higher and take out the liquidity above this previous resistance here. And then, we'll see what happens then. Keep an eye on the euro dollar and see if we can actually start trading higher today. I hope that was interesting and useful, and I'll speak to you tomorrow.